One of the toughest things for most traders is to understand that within the life of any entry, there are going to be moments, minutes, sometimes hours, depending upon the time frame, that the trade may not be going in your favor, and yet it's not stopped out either, right? And that's something that I not so endearingly call no man's land. No man's land is that distance between your entry, right, and your stop, and the distance between the entry and your ultimate target, right? So if we haven't hit the profit target and we haven't hit the stop, the trade's just kind of in limbo. It's in no man's land. And it's sort of this very irritating and patience testing zone that most trades, a lot of trades, will experience. So if you're not ready for it and the trade starts to move against you, sometimes it feels like it's no longer valid, which is why it's so important to always remember, well, where and from how and where is my trade valid? So this is a look at the NASDAQ and the clearing range trade, which this is the 30-minute breach trade. This is the final of the 3 breaches that we look at. It's a 30-minute breach trade. And we knew that the high between these 2 lines would have put our entry just above these 2 wicks, right there. And that's 70.34.5. All right. So 70.34.5 as the high actually makes it 70.34 3/4 for the buy stop entry. So that's how that trade would go. Now what? The trade triggered, as you can see. Is that our high? Yeah, the trade triggered and then started to follow through, hit 70.40, and then snap back. Way back. Now, that wick, this one right here, was probably enough to frighten a lot of traders and maybe frighten some traders out. But every one of these trades has to be taken within the context of what it's doing. In that box is the context of what this trade is doing right now. What does this trade have in its favor at the moment? Propulsion dots? Check. Upward angle of the wave? Check. Solid green grab candles? Check. There are 3 signs that we have a healthy trend on our hands, and there's no reason that this wick should have been anything other than, if you were really ambitious and fairly aggressive, that could have been an additional buy. A test of the wave within the context of the uptrend and consistent propulsion dots, that's a buy, right? But it's, and let's say you didn't buy. Let's say you stuck with the original buy up in here. Let's say you didn't buy again here. It's certainly no reason to get shaken out. So much of being able to sit in a trade that's quote unquote taking heat, right? Heat is just trader talk for unrealized losses. Unrealized loss. Heat is just lingo for unrealized loss. So that's heat, no doubt, right? 15 points approximately of heat. Okay. The other thing too that I think will help traders deal with a wick like this, apart from understanding the overall environment that you're in, is remembering where the trade is no longer valid. Which at very least, you'd give the market to the opposite side of the wave in a trend, and you'd give it to the opposite side of the clearing, which is right here in the clearing range breach. So we're still nowhere near any kind of stop. But that still oftentimes doesn't help traders, because I think one of the best things we can do is brace ourselves for volatility. And that means acknowledge that there's a rhythm of the market. And during that time of day, we'd be looking at this bar right there. On the low, 30 points. On the average, almost 45. And on the high, nearly 60. So we know that that candle can move minimally, can wobble around minimally 30 points. If you're not at least psychologically ready for about 30 points, you're not ready to step into the ring with the NASDAQ on a 1 hour or a clearing range trade. So you got to kind of like build up a sort of tolerance, if you will. So when I say 15 minutes is not much, I'm not saying that from any kind of sense of bravado. I'm saying that from this is half the low end of the movement that I could expect. So if you're already sort of aware and accept that this is what this pair is capable of doing, and you acknowledging the overall trend, the quality of it with the green grab candles, the upward angle of the wave, and the propulsion dots, that move, while certainly unrealized loss, unrealized or heat, is just something you must tolerate. So risk is really, your risk muscle is about tolerating. I'm not saying tolerating just, oh, it's a losing trade and being subjective about it. I'm being very objective about it. You know, I'm already remembering that this market can move minimally 30 points, just kind of wobbling around, and that we only had 15 points move against us. So when I keep all that in mind, this is also when people say you're staying calm, because I know, not that I'm going to panic, but I know where to really be unhappy. That's irritating, right? That's irritating. It's the difference between knowing this is just a very natural process of what this market can do versus what would really be a problem. Greater than 50 points. Selling off lower than the clearing range. Those would be problems. Breaking the wave. Those would be problems. So until I recognize a real problem and know what a problem looks like, because I've defined it now, I know that in my definition is really, it's the opposite of a problem. It's actually an additional opportunity.